very briefly, guys, and I'll try not to take more than 5 minutes on this. Nuts and bolts, the main form of entity which most of your clients utilize when coming to establish an operation in Ireland is a simple private limited company, which is very similar to a UK private limited company. Frankly, we probably copied most of the UK's legislation in that regard. They're very easy to set up. They can be established within 5 business days. Only requires one resident EEA director. So it doesn't require a citizen of Ireland or a citizen of the EU. It just requires one person who's resident within the EEA to be director. And if you can't kind of tick that box, you can also put a bond in place, which is essentially an insurance policy, a couple of grand a year, which just provides a fund to kind of pay taxes and to deal with company law issues if that does arise. An Irish company can have up to 149 shareholders. Past that, you have to become a PLC. As I said, they're very easy to establish. There are no thin capitalization or minimum capitalization rules. And we are, of course, within the EU. So AML and Register of Beneficial Ownership challenges are there, but they're there for every company within the EU. As Joe has mentioned, why Ireland? Well, leaving aside the fact that we're absolutely fantastic and some of the nicest people you'll ever meet, we're a member of the EU. So people come and establish their operations within Ireland to essentially utilize free movement of goods and the freedom to provide services right across the EU. So once you become regulated in Ireland, if you're in a regulated industry, as we know, you can passport across the EU, etc. If you import your goods into Ireland, you're essentially within the tent and you can move your goods around the tent. Since Brexit, we have seen certain industries begin to move distribution centres from the UK to Ireland, etc. So there's more and more of that sort of stuff happening. Skipping along and trying to keep this high level. Tax, I know that Joe rolled his eyes. We don't try and kind of labour the tax point, and I know that tax has been looked at right across the globe currently, but Ireland is attractive from a tax perspective. 12.5% currently on trading income, 25% on passive income, and there are various other R&D and knowledge box qualifiers there. We have a very extensive double tax treaty network, which makes Ireland attractive from a tax perspective. But we do say it's not about the tax, although the tax is obviously important. It's about how fantastic we are. It's about the ease of doing business, etc. That makes Ireland successful in this regard. Most international banks are represented in Ireland, so we have a sophisticated banking system. It's very easy to move capital in and out of the country, and it's very well respected in terms of probity, etc. The stuff then that Mark would enjoy on the call, data protection. We have a very 21st century IP data protection legislation network there. We have a specific court which focuses very much on high value IP work, which is quite quick, and Ireland is very well respected, as is evidenced by the fact that Google, Microsoft, etc. hold a lot of IP within Ireland. E-commerce, very important, and again, we've implemented obviously the e-commerce directive, and we have a lot of trading companies which trade from Ireland utilizing kind of the breaks and the operating within the parameters set by that directive. Data protection, obviously GDPR, critically important. Becoming more important again, where entities which have been established within the UK are now finding themselves having to deal with cross-border challenges from a GDPR perspective. But we're very familiar with helping clients navigate that particular set of challenges. The last thing I want to mention, and this is a real gallop. If people are interested in this, which I'd be surprised, but if you are interested, we have lots more information on all these points. The last point to mention, which Joe touched on, is visas, which can be very important from the MENA region. Ireland is quite good and quite accommodating, but robust on the visa front. There are various different types of visa which are available. Intercompany transfer permits, 2 years residency, which may be renewed, etc., etc. So we'd be delighted if anyone's got any queries, if anyone's got any clients who's looking at coming to establish themselves in Ireland, myself and Joe individually or together, we'll be very happy to answer any queries and provide any further information you have. Rizan, Alberto, chaps, thanks everybody for listening to that. Happy to take any questions. I hope that was of interest.
Thanks, Dominic.
Thank you,
And
Dominic.
I think we've kept it to 15 minutes.
Yeah, that was pretty on time. And I have to say that Dominic has shared with us the presentation and is available currently on the WhatsApp group. So you should have received it on the WhatsApp group. If not, please make sure that you add your contact details on the WhatsApp group of the MENA region, please. Wissam, I leave it to you.
Well, thanks, Thomas.
Thanks, Thomas.
Everyone's all of a sudden quiet. Dominic, Joe, very good stuff. Thank you very much for your contributions. Doesn't anyone have any questions for the gentleman here?
I would have one, yes.
Yeah.
About the bank accounts, you mentioned that residents and non-residents may open euro and foreign currency accounts. How is the procedure? Is a strict procedure, or is it something that...
Yeah, in my experience, Fulvio, opening a bank account in Ireland is actually probably one of the more challenging elements of getting a business up and running here. The AML is the usual stringent AML procedure. What we always recommend is if an incoming client has an established relationship with an international bank, that's obviously your first port of call. We obviously, and Joe would have good contacts within the Irish banking network, but it's the usual palaver, directors, data, etc., etc. And we've had experience. The fastest you can expect to get a bank account open, unfortunately, is probably about 6 weeks. But we've had some clients where it's taken 6 months, where it's been difficult to pull together the information that the banks require. Now 6 months would be at the outside end, but it is what it is. As I said, it's one of the more heartburn and one of the more challenging aspects of getting up and running in this country.
I'd just add to that, and I agree with everything you said. I mean, those of you who've worked in the Middle East and the GCC, who work in the Middle East and the GCC, I mean, you'll know what it's like here. But so actually telling a client or a potential client that it's 6 weeks to open a bank account in Ireland is actually a positive. Because compared to sort of doing it in the Gulf, that's it's kind of standard 6 months.
And Damien, I'm conscious you're on the call too, Damien, and you'd have lots of experience.
We do,
with this sort of stuff too.
Yeah. So the manager of the corporate services arm of our business is actually formerly with Bank of Ireland, and up until about 9 months ago, we actually had a very good track record for our non-resident clients in or around the 6 week time frame. My understanding is something changed somewhere internationally, and our office was one of about 5 offices in the Dublin area where Bank of Ireland their compliance people had noticed the volume of applicants coming through, and they changed their criteria. So what we've been told now is they can only look at cases where there's a physical footprint on the ground, so where they actually have an established office and none of this business with a registered office or anything like that. So that's where it stands, and unfortunately it is quite frustrating. And what most of our guys do initially is they'll go to one of the fintech providers or Revolut or one of those ones first, and then when they establish, then go back to Bank of Ireland. Okay. I wrote down, just as you were talking, Dominic and Joe, just 4 very quick points on the tax. We can even do a little bit better than what the guys had said. We can even, in some cases, have no tax whatsoever on the first mil of profit, depending on obviously what the company does and if it's going to employ staff in Ireland. What we find is a very important point for our international clients. It's very easy to get money in, and even more easy and more importantly to get it back out for international investors and international business people once they're resident in treaty countries. We obviously have no transfer pricing, only for large companies. So for most owner-managed businesses, that won't apply, and there's a good deal of flexibility there with that. And lastly, then, we have a very generous grant regime, both at what they call local enterprise office level and our the bigger state body, which is Enterprise Ireland. So there's quite a lot of free money that's there if you know how to get it and if you go about it in the right way. A lot of it is done on what they call a matched basis. So you might pay half of somebody's wages, but the state pay the other half. And we've been doing quite a lot of that over the last couple of years. We actually have a partner firm who do nothing else, only that. So if you can keep that in mind, and if you have any clients thinking of setting up in Ireland, it's definitely worth a conversation to see what they could be potentially entitled to and what they would need to have in place to get that.
Damien, you said something about large companies don't have to apply transfer pricing guidelines. What do you mean when you say large companies? What is the
I think in size terms, it's a combined group turnover of more than 50 million, I think. Now, it could be wrong on that.
So below that, no transfer pricing. Above that, transfer pricing.
Yeah, as things stand.
May I ask some questions?
Sure.
I'm João. I'm sorry I'm late. I think I missed a little bit, but you know, I'm always curious about Ireland. And I wanted to understand something about, you have the famous 12.5 corporate tax rate. And even though Joe Biden is trying to end that and trying to make you have 21% minimum, I don't think that Mami will be able to do that in Congress, but anyway, it's a threat. But I had the impression that if a company owns real estate abroad, that's not the tax you levy. There is a different tax, is it not? Yeah.
Well, there's a big misconception, Joan. We spend our lives in here, certainly with I suppose the international inquiries we get over what the 12.5% actually covers. So if what you're saying there, if you had an Irish company that owns property overseas, rental income and investment income, or passive income, as Dominic called it, that's taxed at 25%. Now that's on the assumption that it's an Irish incorporated, an Irish tax resident company. And therein lies, I suppose, what the nooks of the 12.5% is all about, whereby to get the low tax rate, the business has to be an Irish tax resident company and carrying on a trading activity from Ireland. Now, what that means is, if you read the textbook from our tax authorities, that the business is firstly managed and controlled from Ireland. So a company, particularly if it has international directors, should be able to demonstrate that it's managed and controlled from Ireland. And what it says about that is you should have well-documented minutes of meetings and so forth around all of that. And then if there is an activity in Ireland. What you're telling
me is that you have to have substance in Ireland in order to...
For the 12.5%. Yeah. For trading. But what you said there, if it's a property holding company that's in receipt of rent, that's always going to be 25% in a company structure in Ireland.
Another thing that Dominic said that I didn't get very well is that you need to have a local, an Irish resident director.
Not quite.
EEA. You need to have an EEA resident director. That means somebody who's resident within the EEA, which is, you know, the European Union and 2 or 3 additional states.
Yes.
They don't have to.
Okay.
They don't have to be a citizen of the EEA. They just have to be resident within it.
Okay. Because I understood that you had to have an Irish director, which will be contradictory with the treaties.
No.
The freedom of establishment. And finally, and that's maybe the question that most annoys people, is there an exit tax when the company leaves Ireland to go somewhere else?
Short answer is yes, depending on its balance sheet profile. But yes, yeah.
Okay, how do you assess unrealized capital gains?
Say that again, João.
Unrealized capital gains.
It depends on what the company's asset profile is when it does leave.
The company has growth in balance sheet terms, but they're not distributed dividends with shareholders.
Yeah.
And she wants to move. So there is a latent.
So what I mean by profile, what I mean by profile of balance sheet, what determined the exit tax, or what would determine the exit tax implications would be if the assets that's on the company's balance sheet when it's leaving, if those assets would give rise to a capital gains tax liability if they were sold. So for instance, if it was just cash, so if the company just had cash and that was it, there would be no exit tax on that because cash isn't what we call a chargeable asset. But let's say it had goodwill, let's say it had IP, it most likely would have tax implications then if it did leave Ireland and did leave its group structure.
One more question. What about, because I'm comparing your system to the Dutch one, can an Irish company borrow from a mother company based in a tax haven like Cayman or Bahamas, and then pay dividends to them or paying interest to them without withholding tax?
It depends on the treaty situation between the jurisdiction where the parent company or where the group company is resident in. Generally, dividends to a individual or a company in a treaty jurisdiction, there'd be no withholding tax on. I'm not 100% sure on interest, so I'd have to check and see. But I know there is a withholding tax exemption generally if they're in a group and if it's in a treaty country. So I know some of the low tax jurisdictions there are treaties in place with Ireland, but I'm just without knowing which jurisdiction, we'd have to check it out.
That's fair enough.
Thanks, Damien. I'm glad you're on the call answering all the maths questions.
I have one question, if you don't mind.
Yes, far away.
Is there any economic substance requirements that needs to be satisfied in Ireland?
Yes. So this is what we encounter a lot, Thomas, and the way I explain it to our, I suppose, international clients and prospective international clients alike is we can only say what the textbook says, sort of thing. So we would have quite a lot of clients that, let's call a spade, would have a very light physical footprint in Ireland. We have also taken on some cases that we have managed for other accountancy practices where we've had to do some fairly large settlements with the Irish Tax Office where they've come in and audited internationally owned companies that were declaring their profits at 12.5%, but really little or nothing was happening in Ireland. So what we would like, I suppose each case is different and you would have to assess each case on its own merits, but at the very least, there should be some functions of the business, not just the accounting and bookkeeping function, some functions that are critical to the sales process of the business or to maybe the marketing or the fulfillment or stock management or whatever it is. They should be carried on from Ireland, and you should be able to demonstrate that the business is managed and controlled from Ireland. And what that, at the minimum, what it entails is the director should be in Ireland periodically and should have well documented board meetings and the likes of that to show what's happening. So, of course, it's all based on what the actual profits are. If the profits are small in the initial stages, it's not really going to be that much of a issue. But if the profits are certainly up in the high hundreds of thousands or into the millions, then you would want to ensure you have addressed that satisfactorily. Yeah.
Thank you.
We see this a lot where there's an IT company or a tech company, which is looking to be or is tax resident in Ireland. Effectively, there has to be people based in Ireland who have the expertise to be able to exploit and make decisions in relation to that IP and how it should be utilized. So, just having people filling in forms or signing pro forma contracts, not actually negotiating them, is probably problematic if you're looking to be tax resident here.
And I think it goes without saying that from an FDI perspective for IDA Ireland, that's not really what we're interested in as well.
Yeah.
It's about
job creation.
substances, jobs. So we're aligned on that, if you like.
Yeah.
Can I raise a question too? I wondered if there are any incentives, incentive schemes for various businesses. And what I have in mind in particular is investment in student accommodation. I've had a client who's actually looking to invest in Ireland in purchasing flats in high-rise buildings to use as student accommodation. And I was told that there was an incentive scheme for that sort of investment. I just wondered to what extent that is applicable.
I can have a look at that. See, I can't recall any off the top of my mind, and we do act for a number of investment funds which have actually invested in and developed student accommodation in Ireland. Now, I'm a lawyer, I'm not a tax accountant, but that's not a good enough answer for you. I'll go away and have a look and drop you a note if that's helpful on that.
Please.
I've a feeling he could be about 15 years too late with the tax. That used to be the way it was before our crash back in the late noughties, but I'm fairly sure it's not there. If your client or your friend is a private investor, I think there's far better opportunities, and I'm happy to have a call with him as well, in Ireland, where you could get potentially double-digit yields and much better quality property, and in some cases with state-backed rents, with that as well. And I'm in the process now of launching a new advisory concept called My Property Investment, which is kind of targeting maybe the likes of your friend that's looking to buy some property or build an Irish property portfolio, because the yields are so good and so strong, and good quality property in good locations, huge demand for rents over here, and so there's a big market for that.
Yeah, I mean, they're a construction company in Turkey. They actually build student accommodation for universities, and they wanted to expand into different jurisdictions, and they were looking to Ireland. And this is what they mentioned. So it might be interesting to have a chat about this.
Yeah, well, one of the big things that I think, because we do have some experience in Turkey as well, with some construction clients there too. In Ireland, the planning process is a nightmare, and if you're coming into it from overseas, it would be very risky to try and get into, such as the complexity. And Dominic, I don't know, have you ever done any on board Planola, judicial review type stuff? There seems to be so much of that floating around these days. If you were going in with your
Damien, we do, is a short answer. We have a large commercial property department who do a lot of this sort of work, and we have investors from all over the world, particularly the US actually, but we do have some MENA investors as well who've been investing in a mix of assets, including student accommodation. Frankly, they tend to prefer things like hotels, but student accommodation does get picked up as well.
Right, thanks. Thank you very much.